car in my driveway. Where did we lose the time? We were just living for Fridays. When I could call you mine. When I could only see blue. You taught me to swim. And when you didn't have to, you took me in. If we can make it all possible, then we can take it and have it all. This is unconditional. This
All right, here we go. You guys should be able to hear me. All right, so we got Joe here. What's up, Joe? Kevin, Gabriel, Amy, welcome. Puccini's in here. We got Omar, Luis, Michael. Michael, you're already in some GBP buys, huh? Sick. Okay. Yeah, I'll check that out. I'm not, but I haven't looked at it, so I might have missed an idea or something. GM. What's up, Omar? What's up, Greg? Hola. What's up, Brandon? Free show. Welcome back, man. Yeah, hadn't seen your name in here all week. Shake up by setting up on Dow. Toluca, ¿qué tal, Lizzie? ¿Cómo estás? What's up, PG? ¿Cómo está toda mi gente aquí? Latam. Nora. Morning. What's up, Vaughn? The boy is back. Guys, well, first and foremost, welcome. Hope you all have had an energetic morning. Full of life. So, Carlos, buenos días. And, let's take a look at what these markets want to do for us here. Let's see here. Yeah. Okay. So, there's a couple things I want to break down. First, I want to share that I did take profit on silver. So, I did take profit here on this order block. So, we had a nice pump up to this level here. So, we end up closing out this silver buy from last week. And honestly, I was very happy with closing this because, one, the RR was fantastic. So started the week off with like a 13, 14 point or pip stop. So I had a setup like this. That's not what I was trying to do. But we get to kick the week off with one of these. What is going on here? Here we go. So nice little stop. Plays out nicely here. So well beyond a 4R. Over here, almost a 5R. And I left a very small amount still open. So I left like maybe 5% of my position open. Now, I am way more bullish on gold now. If you look at the way the market has moved, gold is just scorching to the upside, absolutely blazing through. So I do think that we can get a gold buy here at some point as well, but I'm definitely waiting on seeing how that unfolds. It didn't have anything to sell with gold, and then silver was looking, because gold was so bullish, that's why I wanted to take my profits with silver. It didn't seem like it was leading the movement anymore. If anything, we are looking kind of more like a distribution could set up here on silver as well. So definitely keep my eye out on possible shorts with silver here. And we see it very easily how the market kind of takes some of these highs, immediately works its way back down. And what I wanted to see right now was if we're going to have this play out. So we get a bit of a move to the upside. The market then just barely gets above these highs, comes right back down. We make a quick little move up here into structure before it comes down again. They're still in balance. I think we can still mitigate this. So going to wait for a little bit more confirmation. But we could be looking at possible shorts with silver here. So I'll break this one down later on. But let's dive into indices. Just wanted to follow up really quick with that idea. Let's see. Okay. Now, looking at indices, let's get a closer look at how the markets played out yesterday. And what does that mean for us today? So, what was the target? Do you guys, who can tell me first? Let's start there. What did we talk about yesterday? Coffee in hand. Hey, that's the right way to do it. Buenos dias. Hope everyone's got their water, coffee, electrolytes. GM. That silver was a big one. Absolutely. Got out with profit on DAX. Could still keep going to the downside. Some imbalance. Blessed for Tradetopia. Sweet. Hola, buenos dias. What up, fam? What's up, Brandon? All right, targeting Sunday open. Yes. Flores and Kinder. Got your Hennessy in your hand. That's a great start to the morning, Vaughn. That's how you do it right there. Make sure you got your syrup. Beautiful. So, okay. So what do we got going on? Now, I would say getting into buys yesterday wasn't the easiest. It did require some patience. So we had Dow around a little bit after our session ended. It just barely poked under the week where the week opens, the Asian low. So barely taps this. Hardly would I consider this like a liquidity sweep. At the same time, we had NASDAQ trading within this range. So NASDAQ did not go into below the weekly open quite yet. We hadn't seen that, and we still haven't seen that. Then what we notice is we get Dow Jones to go one level down. So now Dow gets below the low. Okay. So now we are seeing a liquidity sweep. We're seeing the lows get established for the week now, right over here. When this happens, we notice something interesting. So we know that when that happens, NASDAQ also worked its way a little bit lower. Still not below the weekly open. And then what does the market do? The market builds up some momentum. So let's take a closer look over here. So we see Dow work its way higher right over there. After it sweeps these lows, works its way down. And then we start to see Dow Jones spike down. So here we have the sweep of liquidity. Comes back into resistance where we've seen support before. So now you're starting to see a typical break and retest. And then once we start to notice Dow drop down into this imbalance, look at how NASDAQ doesn't. NASDAQ doesn't hold the structure. NASDAQ breaks below. So NASDAQ breaks below, plays into these order blocks after the week opens, and now this is where you see divergence. So if anyone was going to take a shakeout trade, you end up seeing Dow give that to you right there. So your entry looks like right over here. That's your little snipe right there. Now I wasn't seeing this. Like I just wasn't on. So didn't take anything here. And then you could ride this out to clear liquidity. So you could have had a good trade here. This follows all of our model. It's playing into the last point of supply. So something like this could have been a possibility, but it would have required you to be super attentive, really, really focused on price action. And this is a 4R in the making. So this is a great setup. Now, obviously, this is already played out. So what else is there to keep in mind here? Now, remember, and Vaughn, I'm going to answer your question here in a second. Another really important thing is that NASDAQ has still yet to get below the open. So NASDAQ has not traded below where the week opens yet. So for us to, I guess, have the awareness that any buyer, like for example, if you bought at the weekly open or after that, you've been in profit this whole time. So it's safe to say that there's liquidity, there's a pool of money that places their stops below where the week starts. And I think we can work our way further down still. So that could position us into other opportunities. So for example, if we're looking at, let's say like the 5-minute structure, etc., we notice the big sweep to the downside. The market chops up a little bit, and then you see the continuation. So we could be looking at possible plays here. So there's a couple scenarios. So we could be looking at opportunities here. All right, buddy. You can chill out here. And we see the market spike down right over here. So this could become an opportunity. There's definitely another little sweep to the downside before it continues as well right there. And I'll zoom out here in a second. So you have something like this. Now, if I want to see the actual details of this drop, let's go into the 15-second just so you guys can see it really clearly. Here's where the market drops. And this is mini. And that's not a micro. So it really kicks off from here and it sells off. Because this is where you're going to have the most volume. So we just saw it tap into the zone. Now remember, the market drops here well over 100 points. And here we see a reversal of about 80. So I still think it's valid. If this comes crashing down again, valid for a buy position. Still valid for a buy position, especially because I think we still have this little sell-off open. So that's one thing. Second thing, and the reason I think we can go lower here, I feel like we should see NASDAQ get below where the week starts, where it opens, crack below this liquidity, and then play somewhere into this imbalance. If you go to the 1 minute, you do see some equal liquidity here. I'm not banking on this liquidity right now for it to get subbed completely, maybe later on. But for now, I'm not looking to buy NAS, so it's, I guess, not really the biggest focus for me. And Dow has also left us a few key examples of liquidity up here as well. So I think if we see NASDAQ crack below all of these lows here, so if we see a clearance into just anywhere really into here, then I think that can position the market to play into these lows. And then we can see this thing go and work some magic. So something like this, I think we could see as a target. Maybe we even get up to here. But this is the first high probability target. And you're looking at a RR that'll go beyond a 2 risk reward. So it's just sweeping these highs. Take you, I'd say, going for at least like a 2.34, something like that. But let's see the market unfold. We have New York open in 45 seconds. And we have some high impact news here as well. So Powell is going to be speaking right when New York opens. And then we have some data from ISM manufacturing and then job openings. So with all of that being said, we have a couple different waves for volatility. So it should be a good one. So let's see if we're going to have a grand time here. Otherwise, if that's not the case, let's say NASDAQ doesn't drop like this, then we just respond to whatever we get. So let's let the market show us exactly what it wants to do. So to start, we're seeing Dow work its way down a little bit. Nothing crazy. NASDAQ looking to push higher. Now, so far, what we've considered has been the bullish side of things. I like, especially because we're trading intraday. There's opportunity sometimes for buys and for sells, and you also don't want to get too caught up in your own bias and your own preconceived notions. So, I don't, you know. Now the other situation here, which I know some of you were probably looking at, was Dow sweeps liquidity. You know, it takes out Asian lows, London lows, plays into some of this imbalance over here. And then the market pulled back down. So this did the break, retest, and pulled right into here. Considering the fact that New York or NASDAQ also got below and traded just back into Friday's or Sunday's imbalance, I'm sure some of you maybe even took the buy with Dow right now. So if that's you, shout out to you. I would consider this now a mitigation for the higher time frame for this bigger sweep. Look at the way this thing is going. Absolutely crazy. Sent it. So there was a smaller time frame play also at hand here. Look at how NASDAQ is doing absolutely none of this. It wants nothing to do with this. So could NASDAQ push higher? Could NASDAQ look to sweep liquidity here? And then could that lead to shorts? We saw the market take these highs here during Asian session. We have the highs over here. So it plays into the New York session highs where it sweeps liquidity here. So you see it go down this way. NASDAQ and Dow clear the highs. Trade right back down. Typical break and retest. So it lures in buyers. Starts to work its way up. This is a shakeout for the sells as well. So some of you maybe took shorts here during Asian session. I wouldn't be surprised. Now the difference is here, now that we saw this go down, the market trades lower. The downside of looking to sell over here is that we're really not getting too much demand. Every time we drop, it's kind of struggling to stay down here. So I would be really mindful of price action. You do see a little sweep over here, so nothing crazy. Takes out some of these highs, rebalances, mitigates, works its way lower. Maybe we see a move over here. I'd be open-minded. But okay, so yeah, anyways, to go over this idea here, because I guess ran out of time before New York opened. The other idea was this. And I think Joe, some of you pointed this out, right? You said a shakeout's building up. So you have the sweep below. Okay. When it comes down, it rebalances right there. Works its way up. Perfect. Spend very little time here. It does a break. Instead of retesting support, it basically goes and finds resistance. Here, so this induces sellers again. Comes back down to here. The difference really was with an idea like this, that NASDAQ over here worked its way down real slow with New York open, and right now Powell testifying and doing his thing. With all that being said, it doesn't necessarily we don't see price stay over here too long. So I understand if you wouldn't want to take this. Plus, NASDAQ still hasn't gotten below this. So since NASDAQ hasn't traded below the weekly open, I think holding buys for an extended period of time is definitely not a focus of mine right now. Until we see NASDAQ, and not just NASDAQ, you can take a look at S&P. So take a look at this. Whoa, S&P flying. For example, S&P over here gaps down, gets below. So now we have S&P getting below here. S&P sweeps the low below weekly where it opens. And it has left an imbalance right there. Boom. Wait, why is this? Oh, no, that's why. I was like, this doesn't look right. That makes so much sense. All right, hold on, guys. This thing was tripping. Now we're making more sense. So here's where we have weekly open. I was like, something's off about this screen. Here's where we have the weekly open for us. Apparently I can't spell this morning. And as of now, right, we're not trading, since we're not below this, if you're looking to like swing, right, or at least hold a longer trade, one of those, post 4 or 5 Rs going into double digits, considering the fact that we had the big sweep to the downside, the imbalance, once we get below this, this is where the market starts to, I think, establish itself for just a longer term hold, being able to catch that weekly, that reversal, things like that. And you don't need to have the market below here if you're in buys to take any buys. You didn't need that. We didn't need that yesterday. But what you do need, if you do want a longer risk reward, if you do want a higher quality setup, so if you're looking at like a shakeout play, and you guys can find that in the Smart Money PDF or a version of that, a couple different of the entry models, you guys can always get that. It's in the vault and in the classroom, so make sure that you guys are here. If you're not in the classroom yet, drop a 7 in the chat. But if you go to the vault, actually I might need to update the PDF. I'm pretty sure, is it in here somewhere? The Smart Money PDF? I think it's in here somewhere. Or you know what? It might not be there. I think it's in the playbook. No. Maybe it's not in here. I made it. All right, so I'll make sure to add that in here. But I also have a. I made an Instagram post announcing the PDF, so you can just drop a comment on there. It's like a reel, and then I'll send it to you guys. It will just automatically send it to you. Otherwise, wait for the update, and you'll get it. But anyways, what I'm getting at is this: if we're bullish and you want to catch kind of like the low of the week or a longer term, it might not even be a day's worth, but like be able to catch a higher return on a trade, then getting below the weekly open, the Asian is valuable. Now, if you're trading intraday, then it can be, for example, like kind of like what we saw today, where here this was liquidity, Asian session liquidity, and London session liquidity that gets swept up here. This proves that there's very little demand. So let me just add some notes that way, because I want you guys to know how to trade, not just do whatever I do. So you have Asian and London liquidity building up. Here you have the liquidity sweep. So you see that there. Liquidity sweep. And let me know if you guys like the notes like this. After that happens and the market trades up to here, and we're seeing a trade here for a good 40 minutes or so. You see it kind of hold it down over here for some time. This is just showing that the way in which it reacts when we come back up to here, it's a good sign that there's basically no, like, little demand over here. So when you see price trade at specific levels for very limited amount of time, it's an example of low demand. This is a sign that price wasn't there to create a new structure, but to absorb liquidity instead. So stuff like this, you could understand that a little bit better. And then obviously now we've been trading over here for some time, so we may actually have a different setup. This might be a mitigation setup here. You see the market sweep. It's starting to trade bullish here, hold down structure. So we may end up seeing a different play. Now, with all of this happening, Dow has gotten below the weekly low. So, for example, let me go ahead and go to the 15 here. For the time being, we just need this like that. Actually, one sec. Okay. All right. It's kind of bunched up, so here is where we have sweep below the weekly open. Check. That's not the right thing. So this, when we have this is good. So good. Now we could, if everything else lines up, smaller time frames give you a green light for buys, you could definitely be looking for buys. Look at that. We're sweeping liquidity right now with Dow. Meanwhile, NASDAQ is just chilling. Super chilling over here. No desire to go higher. So huge divergence, which means that if NASDAQ were to sweep liquidity over here, like it just finally eventually gets over here, then this is a better opportunity for some sells in this imbalance, like in this range somewhere over here. So it says some alerts here. Maintenance, bro. They don't want me to win over here, guys. Trading View, what's good with you? What did I do to you? What's the word? So now we're at a place where a couple things could happen. We didn't play too deeply into this imbalance. There's still a chance. There's a lot of resistance, support. So there's some demand over here. Last points of supply. So I wouldn't be totally shocked if we come back to this at some point. Don't know when. Doesn't need to be now. But this is how this is going down. And Q over here. And one thing, look at what we're seeing. We're seeing the market, excuse me, we're seeing the market poke above the highs of the week so far. I'm not looking to short anything. No, sir. Chilling. Especially with NASDAQ acting way more bearish. So what we could see is something like this. Maybe. See if NASDAQ wants to do something over here. Now, the other setup that is looking promising has to do with how New York Open played out. So now we're on the 1 minute on Dow. Dow here after, just kind of that 1 hour before New York Open. It's kind of building up buyers all over in this range. And then we see the sweep. So here's New York Open, sweeps below, and then just absolutely rips. So getting into the smaller time frames here. Here's New York Open. Beautiful. Right there. Got a nice, efficient move here. And yeah, so here we have, I can type it in here, right? New York Open. Say pending mitigation. Now we've been trading above the previous highs for 16 minutes, so definitely seeing proof of a bullish structure over here at some point. And what could play out could be maybe NASDAQ doesn't want to go up here yet. That's totally a possibility. And we might see NASDAQ drop, get below the weekly open, rebalance some bit, maybe even go all the way down to here. But if we're noticing, especially if we see something like that, where liquidity is targeted, so money, retail money is targeted, that might be what sets up this market. That could be what allows for the market to work its way down to these levels and then continue. So this is kind of the take on the market right now. That's how I see things, of course. This is, in the crystal ball that I have, obviously. Oh, it's in the vault in the syndicate. Oh, okay, cool. The notes are good. You guys like them? Helps keep track of markets. It's not what I was looking at. The SM is not where I could see it either. The SM. Wait, what's up? Yeah. Okay, thank you. Sorted that one out. Are you using the weekly open here as a starting point for structure? I don't understand what that means exactly. Like for structure, starting point for. So if you can elaborate, that would help. But I'm using the weekly open as kind of the reference. So it's kind of like a reference for where buys started in the week, where we have typical stop losses for the week. And if, for example, you buy below the weekly open, then that means that you're getting a better deal compared to most people that have already been in the market. So, for example, Dow already did this. Dow already gave the on the smaller time, on the higher time frame, right? Dow over here has given the sweep below the weekly open. So we're already seeing more signs of bullish structure with Dow Jones, for sure. Now, another thing that we could consider, so for example here, where does this leave? And this is just reaccumulation. Solid reaccumulation all over here. Had this come down to here, man, that would have been a great trade. But one thing that we can do is compare this to something like the 4-hour or the daily time frame. And, we can see where we're at with the Dow Jones and its structure. So we could pull up a continuous chart to make this a little bit easier on the eyes. So we already had reversed out of here. And we're seeing Dow trade up to a lot of these key levels. So could Dow give us some forms of reversals here soon? I think so. I think we're getting to an area where it can make sense to get some sort of reversals over here. But wait for the confirmations. I don't want to just short randomly. I would rather have the right confirmations for something like this. But you can see we're trading right into this zone. Okay. So Dow is giving more and more signs for buys later on. And what I want to show you guys actually is this. We had a very, very similar setup to what we're seeing right here back over here. Not as clean, but we had the market just go absolutely bullish, just massive moves. And then we see the market turn around. And so this was Friday over here. Friday, it plays out of Thursdays, if I remember correctly. No, it actually plays out of its own the same day. New York open off the same day. So right around this like 1:30 to 2 p.m. Central Standard Time. So like in those last, the power hour, in those last hours of New York session. But this is the interesting thing though. So Dow comes back into New York open territory. And by itself, it's a decent trade. But what gave it, in my opinion, the validity was that NQ at the same time finally swept up liquidity for a few days worth of liquidity. So it took out Thursday's London session lows, Asian session lows, and then played into its New York session. So because NASDAQ was already extremely sweeping tons of liquidity, and at that point we saw Dow at the exact moment come into this key zone. That's why the buys made more sense here. So for something like what we're seeing today, and when you see the market squeezing this much, not just this squeeze, but the overall this huge range from just the last 48 hours or so, actually a little bit less than that, like 36 hours or so. So you see consolidation over the course of a day and a half, day and 15 hours. When you see something like that happen, eventually you'll get the explosion. And what's interesting is if you actually kind of see the range of this, so you said it's about 250 points. Look at how this is moving. Just about 250 points. So sometimes you'll notice that the range of the consolidation can function as the range of the move. And if anything, this is just, I would probably do that from here, because this is really where we start to see more volume. So you're already seeing now that expansion. Excuse me. So interesting. A couple things if you're looking to refine your exits, and you can use more context from the market. Isn't it awesome that you guys are getting this for free? Let's see. It played out. NQ. Nailed YM. Took 1/2 profit at 3 hours. Stop loss to break even. Vamos a ver. Oh, you're ripping then now. Let's go, Greg. Seems like EURUSD is more bullish than the other majors right now. Perhaps there's an obvious setup, but I don't know if the other pairs are going to drag into past structure or not. All right, we'll look into that right now. Poco español. Básicamente, So yeah, give me a second, guys. Let me do a little quick translation. Básicamente lo que estoy enseñando aquí es que el mercado, como Dow Jones ya atacó la apertura de la semana. Entonces vimos el mercado caer, ir debajo de la apertura de la semana, entonces captura mucha liquidez. En estos tiempos ya vemos cómo el mercado después cuando bajó y capturó liquidez, llenó imbalances y el mercado nos dio la expansión aquí. Entonces aquí vimos el mercado básicamente atrapar vendedores y explotar. Cuando vemos un rango, una consolidación de esta forma, podemos usar este tipo de consolidación como este rango que aquí son como 250 puntos. Y nos ayuda también a entender cuando nos va a dar una expansión fuerte, que puede ser similar la distancia del movimiento. Y ahorita lo que espero es mitigación por esta zona. Okay, so I'm going to go into the majors here in a second. I am open to sells here with NASDAQ, just considering how bullish Dow is. And NASDAQ is still trading below all of this. So I think NASDAQ sweeping liquidity, trading into this zone, could work out for a short. I wouldn't take it too far. We'll see if that happens. We might not even get this, but I'll keep that in mind. Otherwise, if we do see NASDAQ get below weekly open, I want to take a buy like this, but only if NQ has already swept tons of liquidity, rebalanced really well. That's kind of the only way in which I would take a buy. Okay, let's look at some majors. What do you think for BTC? BTC. Bitcoin. All right, let's look at Bitcoin. Actually, I'm going to look at the dollar pairs and then I'll look at Bitcoin. I haven't forgotten you. Okay, so let's zoom out a little. We're seeing bullish against the dollar. So the dollar's continuously losing strength here. We're seeing higher highs, higher lows, higher highs. Inside of this, at least with the Australian, you can definitely see some imbalance here. Looks like some imbalance over here too. So if we take a look at, if we take a look at the structure here, as it works its way down, you see a big push down here. Another move to the downside here. Looks like something like this. If you guys notice, you see a little drop right there. And remember, guys, we have news in 2 minutes. So there's news here in 2 minutes. So let's see. Let me rip through this. So here's the low. We come back down. We play off a support. We don't feel imbalanced. Then we see higher highs here. So the structure is bullish. Imbalance here. Also, on top of that, though, you get this nice little push down, then the expansion. So we have two key zones here. Right there. Beautiful. Market's bullish. Not bad. However, we got to take a look at other things. So if we look at something like Euro. So Euro at the moment, similarly, sweeps the lows and just absolutely rips. Pulls back, though. Plays into here. Could we see something happen here later? It's possible. Euro trading very bullish. We may have something happening over here soon. GU. Not GU. Right? GU, we didn't get lower low, so we couldn't get any sort of confirmation for any shorts. GBP USD decided to explode, but then lose this momentum really quickly. So this took out all of this. This ends up becoming a, there's no demand here. And then we see it short again right there for this to lose momentum. Clear all of these highs. Everything was very efficient here, so you shouldn't have been shorting anything anyways. Takes out the highs, and now we're going way back down. So this is giving examples for the market to possibly turn into a distribution with GBP USD over here. So we just might get shorts somewhere in this zone. The longer that we can stay over here, here we go. There's the news event kicking this off. So moving price down across the board. So for example, look at how NZD is dropping. So NZD USD is trading right here. GU is below the lows. Euro is still trading over here. And odd USD is getting relatively low. So what can you do? If you want to test the structure that it's in right now, you can draw your Fibonacci and you see the markets here. So this is already a 71% pullback on AUD USD. Euro USD, you see the sweep down, you see the market go up. This is already traded in between the 618 and the 71%. Decent pullback. GU already below all of this. And then you have this is during Asian session lows. Doesn't happen the same way. This is way lower. GU gets below both of those things. And then NZD USD is still trading down here. So if you're looking at which one of these kind of makes the most sense, you tell me. NZD USD trading between the 618 71%. Definitely not GU. Euro trading between the 618 and the 71%. And Australian. So they're all relatively similar. So what gives you the best odds? To me, it's whatever is dropping the least intensely. So this is pretty close to 618. AU a little bit more bearish. Also, the structure up here wasn't that great. And then NZD USD is trading closer to the 71%. So if I had to choose here, and we're looking at having a much more clear opportunity, I mean, London session gives you highs for a few hours. So we see a good amount of resistance, support, all in the zone. I wouldn't be surprised if we see the buy start playing out of this zone. The market starts to push down right around here. Go to the 1 minute if we want to. Right around here, we see the move down. Trade out of here, some more support. So actually, it looks like right over here is where we start seeing the market sell off. Comes back in, consolidates, lures in more positions, and then makes the move. Take a look at this. Here you see another small time frame, 1 minute example of the market pushing down and then making its move to the upside. So if I'm looking at buys, I like Euro USD. It's under the 71% right now. NZD USD over here, still trading around the same range. AUD USD actually holding up pretty decent. So Euro or NZD USD to mitigate. Honestly, it just looks like these are going to make a move. So it's a matter of making a decision and making one probably quickly in order to take a trade here. So I'd say long against the dollar. That's like my take right now. I would be buying right now. Market execution is kind of like the moral of the story here. So I'm taking positions here. All right, so I just took a trade. Look at where we're at. It's going to be, your call. I think you have great positions, whether it's NZD, USD. Here's your position there. It's just basically buying against the dollar. You have Euro in this zone where it can mitigate and rally. It's got quite a bit of liquidity here. Básicamente yo estoy comprando ahora en contra del dólar. Entonces compras aquí. So this buy setup right there. All right, give me 1 second. Let me see, where is it? Gotta pull this up. All right. So here we go, folks. Same thing, look at that. So odd USD starting to pull to the upside. Euro starting to make its move to the upside. And then you have NZD USD as well, making that push. So really good bounces off these levels so far. For trade management wise, we can see these types of positions here opened. So look at this. You have about 19 pips to the downside. The market gives that reversal, 19 pips or so, which would be clearing liquidity. Looks like that would be the time to go break even. So, for example, if you took NZD USD, the market gets to here. This is the move stop loss to break even. That's kind of the moment that we're waiting for. With a euro, you know, we see the sell-off here. We see the reversal here. So we're looking at the market actually reacted out of here. And not just this short, but over here as well, because this was efficient. So this is a small move. You know, the market moving 9 pips. So if you snipe the absolute bottom, definitely move your stop to the low. If not to break even, but to the low, in my opinion, makes sense. Okay. So let that go here. This is moving along nicely. Anyone take these, any of these? With Australian, the move down, you had one here. Let's play it out of this order block. So here was the sell-off. Here's a huge sell-off. Same thing. About 17 pips, 18 pips or so. Starting to see that reverse. So looking at the market kind of getting up to here. So taking out the highs, filling in balances. Based on the way that it's moving, it looks like we are joining the smart money party here. Smart money party, everybody go crazy. Nance with the woos. On point. I need to get a little stream deck so I can throw in some sound effects. Took euro, got triggered on euro buys. Removing half of my trade if it goes 177 pips in my favor, then it just 177 pips on euro. That's a lot of pips. Missed entries, but in on ETH. Okay, nice. And I'll get to crypto here in a second. So euro right now rejected. So let's do the update here. We are noticing good movement. Market came into the zone, played up into here, currently dropping back down and quickly. So we're going to see, is this going to hold and rally, or if that's it. As you notice, the market came into here, rejected this nicely. Could the market want to come down further? Let's say get into this imbalance, maybe. So you can either decide, nope, I'm already adjusted to reducing my risk, or you can think to yourself like, okay, you know what? I'm going to give it some breathing room. Maybe it wants to come back down to here, then make the move. So that's a choice that you can make. Now, another thing is, and look at how, because I don't think these have mitigated yet. So if you look at Australian, for example, Australian setup here, it's this whole move. NZD USD, it's this whole move. So it's the entire move. We need more. Like, this is not done. This is not mitigated. This sold off, but the market hasn't fully expanded yet. NZD gave us like 9 pips So like about half of what the movement could be. Same thing with Australian. So I think this is basically giving an entry opportunity if you didn't get in before. And it just depends on which one you're more open to. But the market came back. All right, pulled right back in. Pretty similar across the board with all of these. Everything but GU. With GU just proving it's not worth taking. It's way too bearish. So this did the good old break, retest. This is luring in sellers. We'll let this bad boy unfold. I have my stops still below here. What I want to do now is while this unfolds, while we give it time to do its thing, I'm going to look at some crypto. All right. What are you up to here? So, we had Bitcoin get below Friday's open, Friday's New York session. Tons of liquidity over here. And then it trades all the way down into Wednesday's London session. So, okay, some good movement here. And as quickly as it works its way down, it starts to work its way up. So what do we got going on over here, right? What do we got going on? We got a whole bunch of liquidity is what we have going on over here. Once the market makes a move to the downside as it's doing so now, this lures in sellers. So we're actively seeing if the market's going to give some sort of buying setup. It looks like that's what it's building up for. So if you look at this now, if you look at Bitcoin smaller time frame, very aggressive. When you see this happening in real time, because I need you to imagine this unfolding. All right, so just look at how this plays out. Next candle. So this is sweeping down. This is luring in sellers. It's melting. It's melting. This clears out buyers. So good buy. The ironies here. So you have liquidity right over here. After it's done this, now this immediately is up here. So this is possibly setting up for some more buys. So could we see and the sell-off really starts over here, stalls out, builds up liquidity just a couple more minutes, and then makes its final push to the downside. So maybe there's something here. Maybe there's buys in the future here. It looks like it, especially if this can keep some demand. Looks like we weren't here for too long, and there's a lot of liquidity left behind across the board with Bitcoin over here. So with that being said, what does everything else look like then? Is Ethereum, Solana, XRP, how is this looking? And look at how different these charts are. Bitcoin gets below, excuse me. Bitcoin gets below into Wednesday, June 25th price action. Meanwhile, ETH worked its way down to play into where we've seen some last points of supply. So we play into Sundays. Sundays, New York Open. Or Sunday's weekly open. Look at that. Look at that. So it finally gets below the order block, trades into the imbalance. Perfect. This looks like definitely like a setup Giovanni would take. Right in here. So the more detail we get, the better. Here you had the sell-off. So when you saw the market play out of here, so I want to show you guys something. This is playing the order block. This is not playing this smart money sell. These are exchanging different types of money here. This rejects the order block. Off it goes. This plays out of the mitigation. There you have it. So when you looked at, and the other confirmation that you had with something like this was Bitcoin itself. So take a look. Here, look at the difference in price action. You have price sweeping liquidity over here, trading down into these levels, imbalance. So this is trading into June 25th. Meanwhile, at the same exact time, you see ETH playing into June 29th. Like this is the last sweep. The Asian Open gets below, then rips. So that's such a different type of price action. The market here, bullish. While you're seeing Bitcoin give temporarily these lower lows. Lower lows. You have lower lows and then you have higher lows here. So this is definitely a green light for it. Now, where you see a switch in momentum is the fact that, well, Bitcoin obviously was trading way more aggressively, absolutely ripping to the upside here. And this is now building up more liquidity over here. So pretty interesting the way the market has developed here. Based on the way that it's moving now, it looks like and this was the divergence. It looks like Bitcoin could be the setup for the buys later on. What we want, though, we want to see how the market continues to trade. If we get a move like this, then yeah, I like buys, and we can see this rally a little longer. So follow up on this. You guys will get the scoop. But yeah, shout out to you guys if you caught the buy. Well done. Do you think Dow's doing a shakeout? I'll go over it right now. Euro missed. All right, guys, appreciate you all. Hey, if you're learning something, let me know in the chat. If you're learning something, if you're in profit, if you're just having a good time, like to see it in the chat. Make sure hit the like button, click that button. Apparently it does good things. If you like that we're doing this 100% for free, we've been doing this for almost 2 months now. Free sessions. I'm going to keep doing it. Not going to rug pull you. I'm not going to drop a monthly. Having a good time today. Let's go. Straight vibe right now. The button, not like the butt. Get your head out of your ass, Vaughn. Got my coffee. Little candle lit. That's cute. All right, let's see. Still haven't got showed out of gold. It keeps ripping. Savage. Oh, let me drink a little. So I'm gonna cry. Wow. Dow Jones, Jesus. Well, whoever took this one over here, looks like you're buying coffee for everybody. In profit, nice. Now, you asked if shakeouts were building up. Nah, really. Well, especially because Dow is leading the it's front running right now. It's just a bull. It's a rampage. It's like the Spanish bull runs. So don't want to do anything that. Like I said earlier, if anything, NQ might be the one to give us something here. Like, for example, going into this here, we're seeing the market actually just took out some of this liquidity, but then just played out into more. So it just made more. Yeah, I'm gonna go ahead and chill on this one. But no, I wouldn't short Dow. There's not enough signs yet. Okay, in the meantime, let's get a quick update here with Euro. Looks like Euro is moving along nicely. What I want to see is how are the other majors moving too. I'm sure they're moving through nice. So, okay, Euro is playing out. It's definitely mitigated now. Australian is starting to make its move very nicely. Look at that. Like, we actually ended up seeing a nice drop with right there. So, AUD USD hasn't quite broken the high that it made a little bit, like 10 minutes ago. While Euro did start to crack above that. And then you had NZD also chilling. So, we did make, at least I took Euro USD. I feel like that was the right call. And I did end up going with Euro over NZD and AUD because of the structure. I just like the structure a bit better. And we had a secondary mitigation here. So, yeah, markets playing out pretty well here. Let's see this bad boy rally. And then in terms of profit, like where to take this to, clearing this liquidity, it looks good. For example, the high that we have here, this is a London session high, and it was just made. So it's a pretty fresh high here. So we have London high. If you look at yesterday we had an Asian session high. We came down into here. Hold on, let me just give you guys proper price action. So we had New York session trading over here. Let me zoom out. Actually, let me just go to one chart here. We don't need both open at the moment. Okay, so how has this unfolded so far? We had the market with Euro, that's trading very bullish. Here's how it's looking on the 1 hour. You guys can't see the wick in here, can you? Let's see. Just tapped into there. Off it went. 1 hour's looking good. But to give ourselves a reference point, we had the market from here. We have Monday's New York low. This cleared out Monday's London session. And then Friday's New York session. So cleared out liquidity. Made the high. Nothing unusual. Doesn't require too much volatility. Today, right, we start New York session. And then we move downwards. So if we're talking about like quote unquote displacement, the market could easily travel to make higher highs. And then the question you have to ask yourself is, where does that travel to? Because now we're in territories I haven't seen price over here in so long. A few years. Yeah, there we go. So we're getting back up into this territory. So one thing I would want to say, which is kind of interesting, is if you make money in euros, like you're crushing the dollar right now. Someone asked me, I know somebody that's joining the syndicate, I think this week or next week, He's like, yo, as long as the euro keeps going, like this is gonna be cheaper and cheaper for me to get into the syndicate. So if you're in Europe, the syndicate for you has gotten about like 10%, almost 7%, actually more affordable since it's in dollars. So it's kind of funny. It works out better for you guys. Uh, so yeah, this I just thought that was interesting because it's totally playing out the way he said. The way he's like, yeah, I think the euro is going to keep going higher, so I should be able to get started in the annual program. But to talk about, and just for you guys to have an understanding on the range, one thing that you guys can do and check out, which is, it's a cool feature. It's and there's a few different ways you can find this. So for example, I don't even remember, but we have like what's a currency volatility calculator. I remember using this a lot when I first started because I was trading currencies way more in my first like 4 or 5 years. I think it was investing.com had a cool one. And then you can kind of see what the range is like for the last few weeks for specific currency pairs. And there's indicators for stuff like this too. But like here, the average volatility is 90 pips on euro from like just within the day. So for example, like you could use that just as a general instruction, just guidance. So 90 pips. Okay. So let's say here's the low of the day, right? Because we traded here into Tuesdays. Actually, it's not the low of the day. I'm tripping. This is the low of the day. This is London session. Sweep down. That clears up a whole bunch of liquidity and then rides off into the sunset. So here was the low of the day. Market travels up to here, which is about 62 pips. And then it works its way down back into the range. And then now we're back over here. So in an average day, you're seeing, it wouldn't be unusual to see the market expand up into here somewhere. Like, as if we're just going to average this out. It's not perfect or anything, but you could see it go like, let's say something somewhere over here. Now what you could add is what we call a fib extension. And then this is when I like to use fib extensions. I don't actually show it often here. I kind of do it off the top of my head. But when you don't really have a price, like you don't really have anything left over, then we tend to see interesting scenario. I'm going to get to indices here in a second, but when you don't have anything to base off your exits off of from the past, you can use a fib extension. So, and I have color coded these for a reason in the past. So if you guys want to actually have a screenshot, then feel free. This one is usually orange. I wonder if I changed something at some point. Yeah, I definitely did something. Do I have a different setting? Let's see. All right, we'll just go with these. Why not? So we saw the market pull back to like that 71% before, anything. So if this is going to continue in the right direction, then you can see it extend all the way out to the 336. Is like the fib extension. Obviously, this is like if you're going to get a continuation. And so seeing this trade up into this range gives a 4R. Also, if we want to add that to like that 90 pip range average, that puts it actually below the 90 pip average for a day, which isn't bad. Which I think works out decent. To get final confirmations with something like this, what you could do is you could also, and this works as well, is, okay, where is the price if you want to get more structured with your extension, okay, where do we have more demand? So price did get all the way down to here, but it's kind of trading here like better, like more effectively, more often. But if you want to work on just, okay, where did price get back to? Roughly 71%. So you could see this maybe go into the 33.6. If you want to be really conservative, then you can just take, okay, it's basically between this zone. So you can get out between this zone. Keep it conservative. Take an exit right there. All is good. So just a couple of ways you can consider this because you don't necessarily have history. So using fib extension and also then considering the average volatility in a day, there you have it. Since it's sweeping liquidity, it makes sense for this to go do that. Now, this again would be milking the most out of a day, like just taking absolute most. If I was looking to have a conservative exit, then I would look to dial this back to clear out some of this liquidity that we're seeing here. Again, it's all personal preference at this point. But so if I'm going to add any notes here, would be conservative exit based on based on trend line, liquidity capture, and then intraday exit based on average daily range and fib extension. I think we can afford to get a little bit more up the font a little bit. I think it's in the budget. Okay, so at the moment, if we look at Australian, look at that. This has now mitigated, in my opinion. We've seen the expansion. It's picked up more momentum. We saw this push up about 17 pips or so. The drop here, 17 and change. But just on the way that it's moving, like clearly we see an exchange of money here. Taking a look at NZD USD, a little bit lighter, not as aggressive over here. So the winner at the end of the day now, what at the moment is giving the most bullish energy, looked like came down to being the Australian. Because obviously we don't want to just assume we're going to be right and everything's going to play out the way we want it to. So right now, it's time to make decisions. Has the market for Euro given us enough to move our stops to entry? Now, actually, let me take a look at just 6E here real quick. Let me look at the future side. So for futures, we got basically equal lows over here. That's unfortunate. So looking at this here, we drop from right over here, play out of the zone. I think the smart thing to do would be to reduce risk. Like either tightening up more. So, pushing down into like your stops, maybe into like this range, just tightening up if you think, okay, well, we've already mitigated. Like this right here was that movement. Then, all right, stops to here. That way you're at very little risk or no risk whatsoever. Now, of course, you can consider, where are we at right now? Oh, no. You can consider other currencies and think, okay, well, does Australian have something to do? So, for example, what AUD is it looking to trade into here? All right. Okay, maybe Australian wants to trade into here, and then the markets rally. So if you're gonna consider that, then obviously the market can, with euro, can drop down to here, and then expand. Okay, there's some logic behind that. So do I want to manually just watch my stop if that's the case? Okay, maybe you do. So you do that. And then if, for example, AUD keeps going through this, then you go, okay, let me take my exit out on euro. That's one way to do manual exits. It requires more work, you have to process more information, but it is something that could happen, like you're seeing right now. It's working its way down, working its way down, working its way down. Now, as we can see, there's liquidity right here with euro. So euro could take this out and then make its move, since it played right out of this here, right into this imbalance. So the euro could look to still mitigate this zone. So here we just cleared out the lows, played into this little order block at the same time. Now Australian is playing out of this. So now you're looking at a market that, okay, could the market want to bounce? Yeah, looks like it. Clear the lows. Now you're seeing the bounce. Okay, perfect. Now, however, okay, before you don't want to marry the trade. Like I said, you don't want to marry the trade. So now that it's done that, is there any other logical reason? All right, is there anything else that the market is going to want to tackle on? So if, for example, euro. Whoa, here we go. So if we're already seeing, I guess, the motive for the market to continue higher, if it's going to give you anything, then there's no extra reason to keep moving your stop around. Right? You definitely don't want to keep pushing it back. Definitely don't want to keep pushing it back. But you now have, like, every dollar pair is giving you the, like, if it was going to rebalance, it would. From there, everything else is just forcing it. Okay? Everything else is just like you're just falling into a trap of hope. So if this is gonna go, like, it would already go. So if you're like, for example, if Australian keeps pushing down, cool, maybe you can rebalance here. But if it breaks this low, like, you're no longer trading your original setup. You know what I mean? Like, you're just kind of like, oh well, hopefully, like, let's make up all these reasons why the market could turn around and go in our favor. That's all that we would be doing. So the market reacts out of here, plays out of the zone, just taps right there, plays out of the order block. We're seeing Australian, as quickly as it came back up, it came back down. You can look at the 5-minute here. There really wasn't too much demand, so the mitigation went down, but price looks like it may want to keep coming back down. Only way you have any sort of chance with this is if the market is just looking to play out of the structure and then rally, which right now looks like it's doing. So, for example, let's say Australian keeps pushing higher here. And I don't know, that takes euro to the upside too. Okay. From there, you have no other Like, let's say the market goes up again, you're in profit, and then it comes down. And I want to play out all the different scenarios for you guys. So let's say the market starts pushing higher across the board, NZD, Euro, whatever. It starts to work its way up all over again, and then it works its way down. You don't want to keep moving anything, because you have to ask yourself, why did I get into this trade in the first place? Like, what was the logic behind this trade? So we were buying against the dollar. Why? Because we had these bigger picture sells in mind. You had the huge sell-off over here. That was the reason. Then the market here. So, for example, this gives us, 17 pips or so. Okay. So we see something like that happen. Fantastic. So when we see a move like that, well, what are you going to see happen here? We have Australian here that could rebalance. Okay. So there's definitely a better indication of something here. I definitely can see that. I understand that. But when you're in there, one of the things that I see happen often is we just start rationalizing why we want to buy. It's like, oh, well, now we have a 1 minute, imbalance. We have a this, and that. Also, one of the things that you want to keep in mind when you're looking at the market like this is the fact that the active 1 hour candle. So remember when we were looking at this maybe 15 minutes ago, and the market was trading up here. At that time, it looked like it was with Euro, right? So at this time, we're looking at something like this, and Euro looks super bullish. We had the 1 hour, had a wick and everything. So at this moment, the market was giving us a completely different view, but the hourly wasn't done. So we were watching a live candle. One of the things that can throw you off is if you start giving a live candle, like you start letting that live candle guide you. So if it's a 1 hour, but you're only 30 minutes in, it could look like this, right? Where at one point it looked really bullish, but if you look at it now, it's really bearish. So and even still, like we have 17 minutes, 17 minutes left on this candle. This could come back up again. That's totally possible. But even now, let's say we had a different setup entirely. Don't let that live candle throw you off. So take it for what it is. All right, take it for what it is. Okay. So with a setup like this, if you kept your stop right here, you're still alive. If you reduced your risk, then you're not. And right now, it looks like starting to get a decent bounce off of here. As I mentioned, that we had the potential for a liquidity sweep. The market came back into this range. So I'll play it right into here. It looks to me like what we are seeing is that AUD/USD just wanted to refill this entire imbalance before it made its move. As you guys can see that here. If you look at it with 6A, which I have to go here to do that. 6A gives you a pretty clear sign. Market pulls back to rebalance this. Now it's coming back up again. Okay, if you look at something like NZD futures, you saw how it did it. NZD futures came back in to rebalance and then said, all right, cool. Let's bounce. Pull up NZD USD for you guys, for my CFD traders. Saw it come into this range. NZD hadn't mitigated either. We only saw about a 13 pip move, whereas NZD USD here is about 19. So if we're going to see this continue, then yeah, sweeping liquidity basically would be the mitigation on the Kiwi here. And we saw, and this is why like trading, especially currencies during New York session, there's a lot of chess happening. There's multiple pieces that are being moved and being set up for the bigger picture to play out. So for example, you have NZD left liquidity. So, okay, this push down, swept NZD liquidity, took over, needed more liquidity for buys to be able to get, thrown into the market here. Okay, it does that. Euro or GU, okay, goes a little bit lower. We're not looking at anything in there. Euro, because of the equal lows are left behind, comes back, targets it, finds it. Okay, starting to move to the upside. And then we had Australian here, leave a little imbalance. Market comes back down to find it. Great. So with all that being said, out of, I'd say just looking at overall how the market's moving, the setup that I feel like can run here, just understanding that we're not really getting too much demand, even though the market it keeps spiking down. It's either going to be the Australian or the Euro. If you're looking at where the market is now taking us and price action that we're seeing, you now saw Euro sweep liquidity. Now we're getting a typical break retest. Relatively, Euro probably has the best shot at rallying from somewhere in here. Maybe we drop a little bit more. So yeah, depends on you guys how you want to go about this. Obviously, this is breaking smart money principles down, putting all of them together, all into one big place. And yeah, so I'll be following up with that. I think we could see something interesting here. And then let's break down what's going on with indices now. Yeah, indices look interesting to me. Look at how, okay, so let's do that here. Look at how now NASDAQ is below the weekly low. Okay, so finally, we see NASDAQ below the weekly open, below the Asian low. We're trading all the way down to here. So here's where we had some strong levels of resistance, support in the past, and it's starting to bounce out of the zone. Cool. Now, with that being said, what does that mean? What do we do with this information? Do we buy NASDAQ? Now, I wouldn't. I wouldn't. I think that we might just keep pushing down. This is where I think we get a break below. We could get a break below all of this. And it is a very different type of market. So what I think we could see here is I think we could see if Dow keeps working its way down, say playing into here, maybe playing down into here, this dropping, I don't think this pushes NASDAQ up, really. Maybe, but I think Dow working its way further down is probably going to push NASDAQ down too. So I wouldn't want to get, like, if we're going to catch a falling knife, it's not going to be the one that's dropping at the fastest pace. So right now, we're going to wait this out. I want to see where we go here. And I'm curious if we get back into this level with NASDAQ below Friday's New York session low. So keep an eye out on this. I'll drop a markup here and a breakdown in a second. But yeah, guys, I mean, that's what we'll leave off for now. Keep our eyes open, see what continues. I do think the pairs against the dollar are going to keep pushing. But we'll see. All right, guys, have a great rest of your day. Stay tuned in the Tradetopia chat, in the exchange, in the school, and then here I'll be posting some things on the channel. So make sure you're subscribed. Make sure you have notifications set for tomorrow's session as well. So, all right, guys, I'll see you.